Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business, Mike and Dan take a real, uncensored deep dive into the ins and outs of running a full-time real estate investment and wholesaling business.
What's going on, guys? On this episode of the Collecting Keys Real Estate Investing Podcast, we have Litan Yahav, maybe I said that right, coming in from Israel, and he is what I've decided maybe the ultimate passive investor because he has been investing for many years, almost exclusively in a passive nature. And one of the cool things about what he's done is he is now starting to turn this passive investing into a greater business opportunity in the way that he is now creating a startup to help manage his passive investments and keep track of all of them. Because believe it or not, for so many people who are seeking passive investments, ultimately, if you do enough of them, they're not passive anymore. There are parts that you do have to manage, unfortunately. So, Litan, welcome to the show, man. And glad you're on.
Thanks, guys. It's amazing to be here. Appreciate it.
Yeah. Appreciate it. So I'd love to start sort of like where you came from, especially because, you know, you were able to start pursuing these passive investments. I mean, main thing I will preface for people is if you don't have money, you can't really be a passive investor because you need money to make money. But you started in the tech space, and that's sort of where you got this nest egg to start being a passive investor.
Right. Yeah. So I was lucky enough to build a good company, a good startup in a very weird industry, but it went well. And that's sort of like when we made our first money to take that, make some mistakes investing actively, and then decided just to go full passive on it.
There we go. Perfect. So it was a weird industry. So what does that mean? Like it was like the ultimate like foot pick selling website, or like that's what I just assumed.
Yeah.
That's all.
It's even weirder than that, I guess. Yeah. So just like background wise, so I was in the Navy for 6 years, and I went to school. So in Israel, I mean, I went to college when I was 24 years old, and finished that when I was 28 or 29, and then started a company in the diamond industry. So like we found there was a bunch of inefficiencies in the way diamonds are traded around the world. People actually travel the world with diamonds in weird places or ship them with these shipping companies for inspections. Like you can have a manufacturer, a dealer in India selling a diamond to a store in New York, and they'll be shipping the diamonds for inspection, and then they'll be shipping it back because they don't like it. So it's just like this crazy industry of trade of B2B. And we said that doesn't make any sense. When you can buy a Porsche on eBay, why can't you buy a diamond online, just seeing everything in it? And we built a machine for photographing diamonds in 3D, enabling trading them like virtually before shipping them around the world. And that went well. We scaled that up, sold the company in 2015, stayed on board for a few more years to manage it and scale it even more. And in 2018, me and one of my co-founders moved on. Now, just to put things into context, like we sold the company, it was a cool exit. We didn't make tens of millions of dollars, but we made enough money to at that point decide, all right, obviously we're approached by a bunch of like wealth managers and financial advisors to say, hey, give us your money and we'll manage it for you. And we're like, no, I don't want to do that. I think I'll do all right. And I don't believe in day trading, but I do love real estate and I do love private equity and these like more alternative assets. And the cool thing in Israel is that every second person here invests in real estate. I mean, that's
really,
but because just like high level in Israel, the equivalent to a 401k is mandatory. So you don't have a choice when you work. The employer and you have to allocate money that goes into a retirement account. And so essentially every excess amount of cash you have, you look for ways to invest it. And in Israel, there aren't that many. Like the real estate market here is really, really too high. It's like only investing in Manhattan, for example. So what happens is a lot of Israelis have become real estate entrepreneurs in the US and in Europe. And so they'll go find opportunities, many multi-family value add type deals or your ground up development type deals, and then raise money from their friends here in Israel to do those deals. And so we know a lot of people that do that, and they know a lot of people that do that. And that's how we just say, all right, why don't we take the money we have and start to find people we can trust and invest with them. Anyway, that was like, we can segue into that now if you guys want, or down the road, but that was my diamond industry experience.
No,
That's cool.
No, that's super cool. So, I mean, first off, I'm just super curious. How did you even get into that as your startup, being like the diamond industry? Like that's so niche. You must have had some sort of family connection or something.
No, dude, no. So me and my co-founder, so both of us were in the military for 6 years, and we were in this entrepreneurship program in college that's funded by Sam Zell, by the way. But sort of at that point, at the beginning of this year-long course, you're like, let's find a business to build or find an inefficiency in an industry. And a friend of a friend introduced us to the diamond industry, and we walked around this insane. Like you go to this building in Israel, which Israel is a hub for diamond trade. Not many, I don't know who knows it, but it's a hub for diamond trade. And you go into this building, which you've never seen this amount of security before in your life. Like PSA is a joke. So you get into this like highly sophisticated, securitized building, and then you get 50 years sent back into the past, into this building that you have hallways with doors and people walking down with suitcases filled with diamonds. And on these doors, notes saying, I'm looking to buy this and this diamond. I'm looking to sell these and these types of diamond, and handwritten stuff. And these brokers with suitcases knocking on doors. It's like insane. It's like it's totally surreal. And so like, this is like, we're like, wait, hold on. This is how things work in this multi-billion-dollar industry. No way. Let's find a way to make it more efficient. And then obviously when you come to an industry you know nothing about, then the sky's the limit. Like you don't limit yourself to anything. Obviously
that is.
Yeah.
Sorry. I would say that is a really valid point. When you don't know anything about an industry, you don't know what you don't know. And that's why you have like Elon Musk was able to come in and disrupt the auto industry, right? He's like, I don't know how to freaking build a car, but all I know is this is what I want. And so we didn't follow the same general guidelines that every other
car manufacturer does,
startup or manufacturer has done,
or the social media industry, right? Or
totally. We're finding that out.
Now too. You'll see how that goes.
So anyway.
No, that's really interesting though. So like, I mean, I guess that makes sense. You just basically sought the opportunity in a variety of different ways, and that's how you found it. Just pure.
Yeah, I mean, it's like one of those things that, because everyone that's in the industry is like so used to, accustomed to the way things operate, and these are family run businesses, so all the kids are used to what their parents did and what their grandparents did, and so it's like when you come with a fresh pair of eyes, you're like, what? That doesn't make any sense. And timing also for us was everything, because we were just in that phase where the next generation was coming in, and this next generation was born with iPhones, and so they want tech. They don't want to fly to really disgusting places and walk around. Anyway, they don't want to do that. They want to do everything online. Anyway, and they do want to travel sometimes, but they want to choose when they travel. Anyway, so
for sure,
we're lucky to have an amazing team and an amazing timing, and we managed to build a piece of technology that was really unique and enabled the trade of these tiny, beautiful objects online. So it went well. Again, we sold a company, didn't make tens of millions of dollars, but we made enough at that point.
Yeah. Awesome. Perfect.
Yep.
Yeah. That's great. I mean, you did the first step. You made the money and you got, increased the velocity of your wealth just that way. And that's sort of what we always teach too. We have a mastermind called the Instant Investor Program. And with that, one of the biggest things we always emphasize for people is the first thing you need to do if you're going to get into seriously building an investment business is you have to have capital. Whether you raise that, you do like some wholesale deals where you get quick assignments, things like that. Do some flips and get some large money coming in. If you don't do that, you're never really going to be able to invest and create real wealth. Not in any appropriate amount of time. If you want to wait 10, 15 years, that's fine. But, realistically, most of us, we want to do things quicker than that.
Absolutely. So, you've got to build that foundation. Makes it so much easier when you have a good, strong foundation. Doesn't mean you work any less for it. Like you built a company. I'm sure you had a lot of late nights building that company. And then you get this exit. And a lot of people might back away and say, I don't want to. But your story continues on. And you decided to take that foundation and build something else. So I'm curious to hear about the first and only active real estate investments. You said you did it in Ohio, maybe? Is that where they were at?
Yeah. So we have this money, and we speak with we talk with a bunch of people around us that do real estate. And at some point, and I think you guys, at some point, you just need to jump in the water, like overanalyzing stuff. At some point, you get into stagnate mode, and you said, "Screw that, let's just do it." And so we had this guy this company here in Israel that does sort of finds single family homes, does full turnkey. So you just buy this property, they connect you with a property management firm, and totally remote. Like we did not see. So me and my co-founder go and buy these 2 single family homes in the suburbs of Cleveland, Ohio. Not like cheap property, like $260,000 homes. No leverage because we're in Israel. No one's going to give us a loan on that. So obviously it would have been better maybe to leverage, because I personally love cheap debt, even though today it's really, really hard to find. But back then it was really easy. So anyway, so we buy these 2 single family homes, and from the get-go it was just a shit show. Like we had really bad tenants that sort of like just didn't pay. We had to evict them, and then some of the other new tenants come in, same process. Some of them ruin the properties, just like. And at some point, the municipality came in and started to demand things that we fix on the municipality sort of area of the houses, like the sidewalks and driveways and things that were usually not in our jurisdiction, like not under our responsibility, because there were so many investors coming in and buying properties in these neighborhoods, the municipality took advantage of that and tried to sort of leverage their holdings to fix things that would value add to the neighborhood itself. So it was just like a continuation of really bad luck, bad decisions as well, probably, and a lot of work. Like even though we had a property manager, we never visited the property. We still dealt with this on a weekly basis on these properties, and we're like, wait. And while doing so, obviously, we still had more money to invest, and we were exposed to this whole world of real estate syndications, where you put in money and you don't do anything, and potential returns are probably a little less than best case scenario with single family short or long term rentals, but the amount of involvement is exponentially lower. And so we just start to see that and say, wait, why the hell are we doing this stuff when we can take the same amount of money, put it into a fund or a syndication, and just not do anything, and just like count the checks to come in every quarter.
Let somebody else do all the work.
Yeah, I mean, don't get me wrong. There are a lot of problems and difficulties investing in syndications, but they're all one-time problems. What I mean is like finding the operator that you can trust, that 1, will not screw you over, 2, knows what the fuck they're doing, right? So those are like, it's really hard to find these people. But once you do, then it's just a matter of, well, do I want to get into this deal or don't I want to get into this deal? And then it's easier. So we've gathered over the past 7 years, like I'd say 10 of these different operators that we've been investing with. We only sold those 2 single family homes like a year ago, and we lost money.
Really? So you kept them?
It's like, it's at that point where you don't know, wait, should we continue to rent them? I mean, will the market go up at some point, like really fast, and then we'll make a profit, or and just at some point, let's just cut our losses and get rid of these.
Get them out of here. Wow. I think you said something that I would like to point out too, that you thought because you hired a property manager that you wouldn't have to do anything, but you're still dealing with the properties every week. That's just the nature of it. That's what you do. Like, I have 2 property managers that I work with, and at least one of them a week I'm managing them, wondering like, hey, where's this? Where's that? Is this working? Are they doing this? Are they not doing that? Are they following up on your requests? Because inherently they just, for some reason, aren't that great at it. Doesn't matter who they are, the property managers. So you still have to manage property managers, and it's your property and the well-being of your property that you're caring about so much, because you have all your money tied up in a single property. So you really wanted to manage it well, as compared to when you're selecting an operator, like you're saying, and actually identifying the best operator possible and investing with them. And it's not all of your money and one asset. It's your money and other people involved with one larger asset typically.
Yeah. And also one of the things we sort of identified is that you buy a single family home, you're basically exposed to one door. And if that door is empty, you're screwed. But when you invest, and you can't take obviously the same money and buy a multifamily complex with 200 doors, but essentially imagine diversification. When you do that, if you get into a syndication that buys that complex, Then, first of all, for us, you take advantage of leverage, right? Because they're leverage and you're just a small capital in it. Two, they're doing all the work. And three, it's like there's so many doors. So worst case, a few of them are empty and it's not the end of the world. So anyway, so that was for us a game changer at that point.
Yeah,
Gotcha.
absolutely. So yeah, I'd love to go back to what you said before too about looking at the different operators that you have to connect with. So I feel like that's such a big thing, especially when people are sort of getting into investing in syndications and that whole process. I mean, especially for all of us in GoBundance, that we all know 100+ people that are trying to syndicate money right now, but it's like, how do you actually determine which ones know what they're doing, which ones actually have good deals? Especially over the last couple of years where cap rates have gotten so compressed. I mean, that was even a strategy people were doing, was they were getting the job like 90% of the way there and then trying to find someone else to offload it to. So there was a little bit of meat left on the bone,
Yep.
and it basically just everyone kept taking a smaller and smaller bite until finally someone gets stuck with just the bone at the end of it. Right. So how exactly do you analyze that? And like, what's your process?
So it's not such a sophisticated process on my side, to be honest. So first of all, like I said, my first deals were with friends of mine in Israel or friends of friends, just people I trusted are not going to screw me over. That was for me the most important aspect of it. And as we moved forward, we sort of identified more aspects that were important for us. But that was the first most important one. Just trust, right? That the numbers they're saying are that they're legit, that they're not going to lie to me, that they're everything just is there and there's integrity, and that they've been doing this for a certain amount of time. But then at some point we sort of exhausted the people we could trust here, and then finding others that you can trust becomes a real complex situation. How do you find operators that you can trust? And that's one of the reasons I joined GoBundance, by the way. So I felt that there was a high level. First of all, there's a barrier to entry, and so usually very high quality people join the group, and then once you're in, they're very much keen to protecting their reputation, so they're not going to screw you over. That's at least my take on it. I might be totally wrong, but that's sort of like,
No, that's valid.
That's very valid.
And then I ended up investing with a few guys in GoBundance that are operators. And now down the road, this is a span, I think 3 or 4 years or even 5 years into our investing experience. And at that point, you know which questions to ask the operators and what answers make sense and what don't. And for us, our strategy has also been, I prefer to invest with smaller operators. First of all, even an operator, most people don't even know they're going to say there are 3 main terms in this world of syndications, right? There's a sponsor, the operator, and the syndicator. And then there's some other, the GPs and LPs and capital raisers and all that. But at the end of the day, we didn't even understand that sometimes we've invested with people that aren't actually doing the deal. They're the fundraiser for the deal, which is fine. But when you know that there are these different players in that industry, for us, it was important to understand that. Second, sort of when you invest with these people, we've always preferred, if you have access to, and usually many times people don't have access directly to operators, and then usually a fundraiser is great because they vet that operator for you. But just to know who you're speaking with is important. And then,
Do you think you could give like a really quick breakdown just for people what the difference is between a sponsor, an operator, and the syndicator?
Yeah. So essentially every deal requires capital from investors, financing from the bank or from a lender, finding a property, and then operating that property, or the property management firm that operates the building, not the company. And so essentially there are, within that, usually a sponsor or a syndicator is in charge for fundraising, and then the operator is in charge for finding the property, operating the property management firm and all that. Now, sometimes the operator is also the syndicator and the sponsor, meaning the operator is also the one who raises the money directly from investors, also the one that finds a deal, also the one that operates the deal. And for us, the reputation that matters usually is the operator, the person that finds a deal, that communicates with a property management firm, and hopefully that raises the money. But many times when they become bigger, Many times the operators don't deal with raising funds. They want to outsource that to someone else who raises funds for them. Or early stage operators that are smaller, they'll find a deal, but they don't have access to money. And so they'll collaborate with a sponsor or a syndicator that will go and raise money to invest in that operator. Now, that's like the real estate terminology of syndications. But then there's the more financial terminology, which is basically there's a general partner to the deal and a limited partner to the deal. Is this like the right direction, or am I dumbing it down too?
No,
You're doing great.
You're good.
Yeah.
You're the first person we've had on that's like really dove into this stuff. So
This is really good. Very valuable.
Yeah.
So the GP, which is the general partner, many times is the operator. And the LP, which is the limited partner, is the person like me who invests into this syndication. All right. But, and this is another like how it becomes even more intertwined. Many times there are co-GPs, meaning that term that we gave to the sponsor syndicator, that the fundraiser can get a co-GP, meaning they're going to have a cooperation with that operator on the general partnership level, which essentially just means they get a cut from the fees and from the profit. But its terminology is important. So, but let's just, the simplest structure, there's a general partner, there's the limited partner. The limited partner gets the money into it. The general partner might also contribute money into the deal, but they're the one that's liable for the financing. They're the one that sign all the documents with the seller. They're the ones that they're the one that do the active stuff, the stuff that I don't want to do. And they take a fee for that. It might be a closing fee, a management fee. Then they take a fee, they take a cut from the profits. And then this is a whole world that we can talk in a whole episode of Bish about how profits are distributed and all that. But I mean, essentially, like the most common deals are you'll invest, usually the minimums are around $50,000 as an LP. I've heard deals that are down to $10,000 if you're a first-time LP, but usually $50,000 or $100,000 is a minimum. And then you'll invest that into the deal. Let's say it's a multi-family value-add type deal, meaning the operator buys a multi-family complex, plans on renovating it, increasing the rent, and then after 4 or 5 years, after everything has been renovated, and then they sell it. Now, ongoing throughout that period of time, they have cash flow and they have profits. They'll distribute that to the LPs. Usually like 7% on what you've invested as an LP, you'll receive ongoing as a cash-on-cash return from those distributions. And then at the end of the sort of the maturity of that deal, 4 or 5 years or 6, 7 years, doesn't matter, they'll sell the property and then they'll split the profit with the LP as well. So these deals typically before this crisis or interest rates and all that, the profit, the return to LPs usually are between, I'd say, 15 to 20% IRR. Obviously, there are some deals that are less, some deals that are more, but and for me, that's freaking amazing as an LP, not doing anything and get 15 to 20% IRR and also getting ongoing cash flow distributions. So that's sort of, I don't know, that's like 7-minute overview of like syndications. I hope it was accurate to you guys.
No,
that was amazing.
That's great. Yeah, that's great. Like I said, you're the first person that's come on and actually does this seriously, I guess. We've had people that come on and like dabble in syndications. This is your full-time gig. And hopefully people can take away from this as well that, you know, people that come in and spout about the complete passive nature of syndications, like, yes, it's true once the deal's done, but as you're sort of, you know, presenting here, there is thought that has to go in behind it. There is research that has to go into it. And you kind of need to understand what you're signing up for, because one thing I found, especially with people that sort of come into money for the first time, they start looking at these deals and they're ready to just like jump on anything because they want to be a part of like a big boy deal, but they don't even know what the hell to look for or like what to even expect. And you know, you've been around long enough that you do that. So when you say one thing that me personally, that I've never quite understood is IRR, right? Can you, like, what exactly does that mean? Like, I understand how to calculate it numerically. Like, I've looked up the formulas, how to make it in Excel. But at base level, what is the IRR?
I think that's a great question because many people have no clue. I've had operators report the IRR and it's not even IRR.
Right. I get that.
So I'll give you. So all right, everyone. If I give you $100 and after 5 years you give me back 150, I made $50 profit, which is 50% return on investment, right? That's the ROI, right? And that's sort of like most people know what ROI means, right? So I gave you 100, you gave me 150 back, 50% profit, 50% ROI, right? Or 1.5 multiple on the money, right? Same thing. But now, if you want to calculate that on an annual basis, you can just say, all right, it was 5 years, divide the 50% to five, so it's 10% annualized return, right?
Yep.
All right, now let's take this a different scenario where I give you $100. Every year you give me 100 back, you give me 10 back, and after 5 years you give me 110 back. All right, so over the course of those 5 years, the end game is the same ROI. But in both situations, I get 100. I give you 100, you give me 150 back, right? And in both situations, the ROI is 50%. Does that make sense?
Yep.
But they're two different. The second deal is a lot better than the first one because I got cash early on. I didn't have to wait for 5 years. I got cash on year one, and the only formula that sort of takes that into account is IRR. So the IRR just takes the cash flow into account and creates a situation where you can then compare apples to apples between investments and not just ROI.
And when you're saying cash flows, and what you were saying is the timing of cash flows are taken into account because money today is worth more money, generally speaking, than the same amount of money tomorrow.
Yes, that's one aspect. But the second aspect is that when I get that 10 back, I can reinvest it into something else. And that money will now be deployed and working for me to generate more money. Right. So anyway, it's IRR is super important. And then there's sort of the Excel or the more specific one, which is XIRR, which if you look in Excel, there's no IRR. Anyway, we won't dive into that, but
so
IRR,
the good question then I guess from here would be, I don't know how many syndicator emails you guys get, but I get quite a few of people spouting off their fund that they're starting, and they will give ROI, AROI, annualized ROI, and IRR. Not all of them necessarily will be presented, but sometimes it'll just be like, here's the annualized ROI. So would you, from your point of view, what are you going to review? If they pitch you annualized ROI, does that matter to you, or are you going to ask directly what the IRR is?
So AROI sometimes is the correct name of that is AAR, average annualized return, and that's what most syndicators will use for that average. But it doesn't mean shit. Like what matters is
right.
the IRR.
Because they can send maybe a higher AAR annualized. I can't even say it. Average annual return.
Right.
Yeah, sorry, I'm good. So they'll show you that, and I'm just trying to pick at this to see if I'm accurate because that number might look better. It might lure you in. It might be a better graphic and not show you the IRR right away.
It's like telling you, listen, you're going to make 5,000% on your money, but it's only going to happen 100 years from now.
It doesn't. Yeah, exactly. It doesn't account for when.
Well, that's the AAR, right? That helps. But then when do I get the money back? Only in 100 years from now? Or do I also get it ongoing?
Right.
And it really matters, right? Because it doesn't help me if I'm only going to see profit in another 10, 15 years. I want to understand what's going to happen ongoing, or at least to compare deals. Because the other ways, there's no real way to compare deals. Obviously, like if you think about it, like when you look at those multifamily value add type deals or ground up development type deals, like usually a ground up development type deal will not have the IRR won't really matter because usually all the upside is at the end because you invest and then they go and they build a property and then they sell it after 2 years or 3 years, right? Usually you won't have the IRR won't really matter at that point unless they have capital calls and they don't call for all the money up front, only like on as they progress with the project. But usually you put 100 in, only after 2 or 3 years you're gonna get the money back, as opposed to those cash flowing assets where you have ongoing distributions.
Yeah, interesting. So I guess main thing you look at is the operators and then the IRR. So I guess just people have context. What is like considered a strong IRR in your opinion? Assuming that all the operators are good.
Yeah, no. So again, this was pre crisis. So also many times the IRR or the performance of these assets or these investments include not just the cash flow from the profit of the property, but many times these operators will go and they'll refinance the property, meaning they'll take another loan from the bank in order to pay back investors so they get money back earlier. And that also, by the way, improves the IRR. So they're incentivized to do that for you. But you also get cash out of the deal while still holding equity, meaning you'll still be part of the upside at the end and get ongoing cash flow. But that assumes that interest rates are low, because as interest rates rise, it makes less sense to refi a property, right? And so,
Right.
but based on historic, like what's happened over the past few years, good returns have been. So I had a property do 35% IRR, an LP as an LP, right?
That's amazing.
That's awesome.
So that's the best thing that's the best I've seen, but on average it's around 15, 16%.
Gotcha. So some of these could be home runs, while others you're just expecting that good return around 15%. But you never know. You could pop off a home run if say interest rates go down, or cap rates compress more than unexpected. You could get a nice, maybe a grand slam. 35% IRR is pretty amazing.
But I also want to say full disclosure, right? So I invest with small operators. It's like 1-2-man shows or woman shows, just because usually the smaller operators, do 1 or 2 deals a year, and they're super hungry to get these amazing deals, and they're going to be hungry to make sure they go through, and won't dare to lose any money. It's high risk because they don't have as much experience as the huge guys. But on the other hand, and I'm not saying this is right or wrong, I'm just saying for me, the way it is, I prefer those because the bigger guys have a lot of experience, but also for me, they have really nice offices. They have huge teams. They have a lot of limited partners like me. So they have hundreds or thousands of people like me. So they need a lot of deal flow, and they'll send a deal every other week or every other month. And it's a numbers game. Some of these deals will be amazing, and some of these deals will be subpar or even fail. And for me, I prefer to find the people I can trust that do those that lay work to find the best deals and invest with them. But this tends to be higher risk, and they're also going to share more of the profit with me. So my returns might also be thanks to the fact that I do invest with people that I'm also closer to the table. I get bigger chunk of the cake at the end of the day.
When you say smaller, like what size of properties or investments are these smaller operators making? Are we talking 2 million, 10 million?
They can buy 200, 300 door complexes. They'll just do one of those or 2 of those a year.
Okay.
As opposed to others who do one of those a week maybe, or every other week.
Gotcha. Okay.
And some of these also do like flips, and some of these do ground up, and some of these do storage units, and so it depends. But for me, I don't really care. Now I'm more interested in other types of asset classes, but it doesn't really matter what the asset class is, as long as I'm investing with people I can trust.
Yeah, awesome. I love it. And now, since this has been your full-time gig for a while, your full-time investment for what? How long did you say? About 10 years?
No, 7 years.
7 years. Okay,
Yep.
7 years with 10 different people. You said. Yeah. So now, obviously, you have to figure out how to manage all of those. How you manage your performance, your cash flows, everything like that, and that's where your next startup that you're building has come.
Yeah. So, if you think about investing, so when you invest in one of these deals, let's just say you put 100,000 into a deal, they're supposed to distribute 8% cash on cash return every year, but it's distributed every quarter. So it's $2,000 every quarter. And after 5 years, it's supposed to exit, and you're supposed to make 150, whatever. So when you invest in one of these deals, it's really easy to track everything. You get a statement every quarter from the operator saying, this is the performance, this is the distribution. And then a week or 2 later, you're going to get the money in your bank account. Fine, easy. When you have 10 or 15 of these, good problems to have, but it's hard. Like, I'll get an email from an operator, and they'll say, this is the performance. I don't even remember what I invested, how much, what were my expectations. Yeah. And even if I do, a week or 2 later, I'm going to get money in my bank account, I'm not going to remember what is this associated to.
Right.
And add that on in addition to everything else in my life from a financial standpoint, I didn't sign up for that. I don't want to work in managing my money. So you said it's a full-time job. It's not. I don't want it to be a full-time job. I want to build startups. That's my passion, right? And so 2.5 years ago, me and my co-founder said, I mean, screw this. Let's just build ourselves a piece of software to automate the tracking process, like a place that I can just forward those emails, upload documents to, and it analyzes them. Link in all my bank accounts, and it'll automatically track those transactions and link transactions to specific investments, so that it'll just let me know, hey, this operator is doing better than expected, this is underperforming, or whatever. This even missed the distribution,
Right?
Or let me know when there's an exit event coming up, because I mean, at some point these are going to end, and you want to be prepared where else to allocate the money to. And so, anyway, so we built that for us, and then while doing so, a bunch of friends wanted it as well, and we're like, wait, there might be a lot of people like us in the world. And so we started to research the hell out of the world and found there are millions of people like us, especially in the US. People like us that sort of have more complex portfolios, and at the end of the day, need to decide between building a crazy spreadsheet, processes and stuff around that, or paying someone tens or hundreds of thousands of dollars a year. And so that's why we built Vyzer, sort of to bring a solution to people like us, a software that sort of serves like a virtual family office, a place where you just throw everything at, linking all your bank accounts, and then it'll monitor everything for you, project forward, help you like make better decisions. But the cool part is we're also helping people to see what people like them are investing in, creating more transparency in the private markets, understanding, wait, this is an operator that 50 people within in Vyzer have invested with. You can communicate with them and then see like actually who they've invested with. Because I've spoken with operators that I've never met before, and there's no real way to vet them other than them telling you, hey, yeah, I'll connect you with these 5 people who have invested with me. But how do they know that if they're connecting with like people they're probably not connecting me with people that were in bad deals, right?
For sure. Right. Yeah, exactly.
Anyway,
so that's one point I wanted a clarification. So this isn't just for real estate syndications. You said kind of like your own family office. So you can, I'm assuming, set it up so that it could be any other alternative investments that you bring in.
Anything, not just alternatives.
Yeah.
It can be public markets, private markets, boats, cars, W2 income, anything. The idea is to have that one source of truth for your financial life. So, I mean, in the US, they're like the leaders like Mint and Personal Capital, which I'm sure you guys have heard of. But these companies, once you have a complex portfolio, they just don't cut it, right? So,
exactly.
Yeah. What's your business in Vyzer? That was it.
Vyzer. It's VYZER.co.
CER.co. Cool. I'm gonna go check it out right after this.
Come on, Mike. I thought you knew that.
Well, no. I mean, like I haven't looked at it at all, but like that's definitely something that I'm in that boat right now, just with all the different rental properties. You know, I made my first private equity investments this year. You know, we do hard money lending. You know, I own securities. Like everything right now is just like
it's hard to manage it, and know where it's
so
at.
hard to manage it, and like most of the time, I don't even know how much money I'm making or not making because it's like all over the place.
That's so. I mean, you're right, and it's fucked up, right? You work so hard to make money, you have no clue if you're even on the track to.
I know.
You know,
I've spoken with multi-millionaires about this, and they're like, my wife just asked me about this, and so I just wrote a bunch of sticky notes and put them on the refrigerator for her to know where the money's at. And what the like? You're worth $30 million, and that's what you're doing, or
that's your method?
It's pretty cool.
No, that's awesome. People listening are like, "Fuck these guys."
Yeah,
exactly.
Exactly.
So think of it more as an inspiration, you know, things to aspire to. Because even this morning, Dan and I, we were going over some of our deals that we're trying to figure out how to allocate resources for stuff. And Dan's like, so we're selling this property. It's like, we're only going to be getting like $130,000 back. And I was like, you know, and we were like kind of bummed about that. But I was like, Dan, we had this same conversation 2 years ago, but we literally only had $40,000 to our names. Like,
now 6 figures just doesn't cut it anymore.
Exactly.
I really do like the idea to track this, because if you nerd out or you're just trying to fill out your damn one sheet for GoBundance, like this would be super helpful, time saving, but also it's so easy to lose track in performance. Like when you're diving in and choosing to make an investment, you're 100% focused on that. But then once you make the investment, like your mind's onto the next one. Like, especially if you're like a deal junkie or whatever, like you're onto the next one. You don't want to have to think about that or follow up on that to make sure or see where the money came from, or if your exit's what you planned it to be, all that sort of stuff.
Yeah. You also don't want to be sitting on too much cash and too little cash. Again, these are if you want to
Sure.
be in wealth creation mode, you want your money to be deployed.
Mm-hmm.
I mean, again, that's all right to what happened over the past few years. I don't know what's gonna like this upcoming situation. Let's just call it. I don't know. I mean, interest rates going up, the zero risk interest rates might be to the extent where it might just make sense to put it in the bank and just get the APY. I don't know. I mean, I don't know what's going to happen, but anyway,
I mean, it is coming around weird. I saw the credit union that Dan and I use was advertising a 5.5% APY savings account right now. So
I mean, that's zero risk.
Yeah.
But I don't know if you guys sort of heard, like the Fed just released the statement, right? They hiked it by another 0.75, right?
Oh, did that? Is that today?
That was today. Yeah.
Oh, I didn't see
that was like
it
a few hours ago. Yeah, it's like
really. Oh my god,
it's going up.
That's crazy. Yeah,
so that credit union might now be 6%.
Well, honestly,
yeah, right? Yeah, at this point,
wow,
that's outrageous. Anyway, all right. Well, to get towards the end here, I love what you're doing. I feel like you're kind of doing stuff that I personally am striving to get to. Have enough capital to start having that made my primary investing, because I mean, honestly, Dan knows I'm lazy, man. I just want to travel around and just make money and not have to worry about it. So to get into the end, I'd love to go into our sort of last round questions here. So first off, is always a listener favorite. What is your craziest real estate investing story? And if you don't have a real estate investing story, since I know you've been mostly passive, you could also do what is your craziest business story. This can be good, bad, in the middle, whatever.
I mean, the real estate crazy story, it's just that long episode with those two single families. It was just like, it was just really on repeat, just a sheer bad luck. But I mean, if I go into the diamond industry, one of the funny stories is when we set out to build a product that would replace physical examination of diamond dealers, and we went to diamond dealers and showed them, hey, this is the result. What do you think? It's like, no, they tell us really like weird shit. They'd say, I want to smell the diamond. I'm like, what the I want to see the life of the diamond. And like when you're in how do you replicate that feeling? So it's like we got some really, and people told us obviously, well, you're never going to replicate the smell and life of a diamond through 3D image. Obviously we didn't listen.
Do diamonds smell? I never smelled my wife's ring.
It's
okay. It's just a thing. Okay. I was like, am I missing something?
I think if you're greedy enough, they
definitely. Yeah.
It's like, it's like on like Blood Diamond when they like have the big one and they're like, you can feel like the heartbeat of Africa.
Yeah, because it's got somebody's arm attached to it.
No, that's interesting. So even having to come through that, I bet that had all sorts of crazy. Were there any like super crazy characters or people that you had to deal with on a regular basis?
I mean, we at some point in the business, we opened a subsidiary, an office in India and Mumbai. Not many people know, but Mumbai is responsible for 95% of polished diamonds in the world.
Oh, wow.
Really?
Diamonds are mined in South Africa and Canada and Russia, whatever, and they're sent the vast majority of them through Dubai to India, and then they're polished and cut in India. And so there are these massive buildings. There's this diamond exchange complex with 29 buildings, like 9-story buildings. And when we founded the company, we opened an operation there. We rented an apartment in Mumbai. We relocated a guy from Israel to live there, and me and my co-founder were on off 2 weeks every other 2 weeks there. And all we did was knocked on doors every day in those 29 buildings, 9 floors each, for 6 months. And the funny thing is, when an Indian sees a white man, they're sure we're coming to buy diamonds. And so they'd open this sort of peek hole from their doors in the diamond exchange, and they'd see me, like a white dude, wanting to come into their office, and they're like, open it up, serve me tea, coffee, and then I take out my iPad and I try to sell them stuff. And so change in their face when they see that, it was just hilarious. Every single time we do that. And so that was taking, I guess, advantage of that, but it was It was insane.
No, that's awesome.
great.
Yeah.
And that's like the epitome of hustle. That's crazy.
That is crazy.
That's
It's not like you built this system and sat back and had somebody sell for you. You were literally beating the pavement. That is really crazy.
No, we hustled it, totally hustle it. Yeah.
I love that.
That's awesome, man. Good for you. All right, next question. What is a tip you would have? And I'll put this same thing you can do on the business side of real estate, but a tip you would have for someone who is looking to get started as a real estate investor or in their business, or has started their real estate investing in business and is looking to take it to the next level.
Listen to all your episodes.
Yes, do it.
There we go. Subscribe to Collecting Keys.
Download them.
I think so. I think like learning as much as possible and absorbing it, but deciding at some point that you've learned enough and you should just start doing. Because like I said, I think we said during this episode, it's like you can get into that situation where it's just this repeat mode where you keep on want to learn more, and you don't take that leap. So I think define an end goal, a milestone. When you reach that date and time, then that's when you move from learning to doing. And during that period, podcasts, books, just like meeting people and going to these events, and there are a bunch of meetups and groups for people that want to get involved, like your mastermind group and a bunch of others. So want to get involved in real estate. So I do that.
Yeah.
Sweet.
And there's always so many mastermind junkies out there that never seem to accomplish anything. Everyone knows those people. That was always a thing when I was in the corporate workplace for a while. Everywhere I went, there was like a certain age demographic. It was people like 40s to 50s that loved Tony Robbins, right? And they would read every Tony Robbins book. They would like take their PTO to go to his event, and they'd come back so hyped on life and how they were going to change it. And then 48 hours later, they would be just as miserable as they were when they left. They didn't make any changes. But,
it's all about making
that
the decision up front, right? That's if you don't make the decision up front, then it usually won't follow through.
Absolutely.
Exactly. Yeah, exactly. So,
and also just one more thing on that, like finding an accountability group or partner. That's super helpful as well. Like when you have that accountability, like we have that in GoAbundance a lot, right? I mean, if you have that accountability aspect of it, then it's super helpful as well.
Exactly.
You got to have that.
And I mean, and that's like masterminds too. I mean, that's one of the mastermind that Dan and I got started doing our business with. That was the main core of it, and still is. We're still involved with that group. And then now with our instant investor program as well, you know, having people that are running the same style of business, or going through the same challenges as you are, trying to do the same things, is so unbelievably invaluable. So try to be around that as much as you can. Awesome. All right. So last question. Where can people find you, follow along, and reach out to you if they feel so inclined?
Yeah, sure. I mean, happy to help wherever I can. You can reach out to me either in my email, Litan, Litan, at Vyzer, VYZER.co, or Twitter, Facebook, LinkedIn. Pretty active on all of them.
Perfect. Sweet.
Right on.
And aside from that, guys, go and check out Vyzer for sure, and reach out to Litan. And any last words from you, Dan?
No, I'm excited to go check this out. I'm actually going to your webinar in a couple weeks. So
there we go.
Yep.
Perfect. Awesome. Yeah. Well, thanks so much for coming on the show, Litan. We appreciate it. And thanks so much, everybody. We'll talk to you guys next week.
See you.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.